Okay, so thank you, everybody. I will need to, actually, it's shown me a bit of balance, so please bear with me. Um, as we know this afternoon, we're talking about resilient budgeting for small charities. There have been a lot of challenges along the line when we look at it in the situation with charities and the situation, the economic situation in the country, and the mindset of people about giving and about how they will make their own needs, they will ensure that they and their families are comfortable. So under this, I will now, with this in mind, I will now start and I'll share my screen with us and we can take it from there. So screen sharing now. I'll share my screen, which is screen 2. Can we see my screen, please?
Yes, we can.
Okay, okay, it's great we are saying it. So we're on the topic resilient budgeting for small charities. And as we know, I am Beam from AE Accountants Limited, and we support quite a number of charities and non-profit organizations, especially churches, in supporting them to adapt, grow, and thrive, no matter what the economic situation is, and to adapt in that we want everyone to work in line with their statutory obligations. And then we also support small businesses and medium-sized businesses in doing the same thing. But this afternoon, we're talking about charities, which is a major area for me as a person. And that's why we keep having these webinars. So let's move on. So our topic, our contents for today, our agenda, we want to understand what resilient budgeting is, and thereby we will start from budgets. Then we want to mention and talk about simple tools that will help to strengthen our budgets and make it easier in preparing. And then we want to consider how to avoid common pitfalls and how to plan confidently. And then we'll talk about availability of free templates for you to budget with if you require it. That means you are going to inform us that you would like us to send it to you, and we will send it to you. And also, if you want snippets from this webinar, that will be made available as well. So, why budget? As the very first area that we've got to consider is, why are we thinking of budgeting at all? As we know that when we are planning, we cannot plan without including the finances. This is how much we will need for this project that we're working on, or that this project that we want to work on. We're going to need maybe 100,000 to feed the poor, to feed maybe 250 persons for 1 year, that kind of thing. We need to assess what we need to be able to achieve our plans. Now, when we assess what we need, we now need to consider, how do we go about this? okay, we have who are our funders? Are their funding restricted for a particular area of our work? Or is it a general fund that we can use for any area of our work and that we can also use for administrative purposes? So that's why I said the budget is a compass. It gives the direction. Sorry about that. It gives the direction of where we're going, how we're going to get there, and when we're going to get there. And then with that in mind, we consider in thinking about budgeting, what is our goal? And that's why I said we want to feed 250 people for 1 year. And after that, for maybe some other years. But where are we starting from? For the next 12 months, what are we going to require to feed them? So with this in mind, as we plan, we've got to consider transparency. All our funders, they would like to know, what are we intending to achieve? Something is going wrong this afternoon. Sorry about that, but we'll get back on track. We'll get back on track. We'll get back on track. We'll start again. We'll continue from where we are. I think the screen is now changed a bit, but please bear with me and let's just use it as it is now. So as we were saying, that what is the funders who will contribute or donate or give grants for this purpose, they need to know, how long do we want to do this for? What do we want to do? So as we are following the compass, which is steering our charity, we are also saying to the funders that we are transparent in our reporting. Now, I'm not talking about statutory reports. I'm talking about planning now. When you go to any funder, you have to tell them, this is what we want to achieve. And this is the finances. These are the finances that will be required. And this is how we intend to spend it before they consider whether they want to donate towards it or whether they want to give you a grant. But apart from that, it also helps us, even as a charity, to be able to confidently plan for the future. Are we going to exist after the next 3 years, after the next 5 years? Do we want it to be a continuous charity over the years? I mean, like when we think about British Cross Foundation, it's over 100 years old. Is that what we want? Or is it a charity that's based on, we want to complete this work in the next 5, 10 years? So we've got to consider all that in all our planning. And so, as I said, it helps, the budget helps to give, steer the charity in the right direction. It helps to give resilience, and the purpose is beyond just bookkeeping. It plays a very vital role. And we've got to think of those vital roles. And that's why we are talking about transparency. Okay, that's number one. And then it also helps with our cash flow management. How much are we expecting? When are we expecting it? Because at times charities consider, oh, during this year, we should be obtaining 150,000 from this grant, and from this donor, from that grant agent, and so on. But when is the money coming in? And when do we need these finances? These are part of the things that we've got to consider. And that's where cash flow comes in. And then we think about it helping our compliance reporting and also decision making. There are times that we know from what we expect coming in, from when we expect it to materialize, we know whether we can hire a member of staff, increase our output, increase the number of people we're supporting, and so on. So it's always essential to build the budget up. Now, apart from building the budget, in that area, we also know that it also helps the trustees to be able to know the kind of charity they're working with and to be able to comfortably stay in that role and support the charity as need be. Trustees need to play a role in maintaining and sustaining a charity, in using their professional advice and so on. But if they realize the charity doesn't even have a plan, then many of them will step out. And then the other thing is that many charities, once you earn above 25,000 in the year, you have to either have an independent examination of your books and records, of your accounts and records, or an audit. So it helps us to prepare the way for that as well. And it makes that process easy. So these are essential, for us to be able to survive in the changing economic climate. And then when we talk about that, we've spoken about budget. But today's topic is about resilience in budgeting. So we will go on to that slide now, where it talks about resilient. What is resilient budget? It's a strategic budget that is flexible. It is rolling. We're not in a situation where we say, oh, we've already budgeted for the year and that is the budget. You kind of consider what is happening. What are the changing realities? Were you expecting a grant of 100,000 and then you got 90,000? Or you were expecting 100,000 and then you got 150,000 already, and you're already still expecting another 100,000. And you had planned your budget towards just 100,000, but now you're going quite above that 250,000. What do we want to plan? Are we planning for reserves? Are we planning to extend our tentacles and serve more people in that community? Or, whatever our niche is, what do we plan to do with that? So that is why we're talking about resilience in budgeting. The experiences of COVID is still fresh in the minds of so many charities and the impact it has had. Now, I say to you, a quick win another quick win is to ensure that you consider every form of costs, because at times that's where so many charities miss it. They don't consider all the costs. They're not transparent enough. Or perhaps it might be by error. It might be that they just think, oh, two members of staff will earn just that, not considering what's the NI implications. The employer's NI implications. How much are you going to use to support the members of staff, and so on. So these are areas that we need to consider when we are talking about resilience in budgeting. So I called it honest costs. And then I also said that you must be flexible. That's why it's got to be a rolling budget, continuous. Consider what's happening, the realities, and then how can you move the budget in that area. You are looking at the changes that need to take place. You are recording them. You know what the original is, you know what the next step is, and so on. So with this in mind, we're saying once again, what are the core building blocks of a resilient budget? And that's what we will go to next. So I say the core building blocks which you've got to consider, there are quite a number, but I'm taking a few to discuss this afternoon. We've spoken about planning and then recognizing income types, whether it's going to be a restricted fund or unrestricted, whether it's something that can be spent, like I said earlier on admin and all the general facilities that the charity provides, or whether it's just for some people that it has been set aside that, oh, when you achieve this, then use this funding for such and such a thing, or maybe like buy a building and that kind of thing. So if it's restricted, it has to be spent only on the purpose for which it is restricted. And so then we also said recognize the income type. That's restricted and unrestricted. Then true cost accounting. That's why I said make sure you bring in all the expenditure that you can think of, that you know you will need to ensure that the charity is running well. If you are going to pay travel costs to volunteers, consider it when you are budgeting. The minutest detail, consider them. And then I also said something about budgeting, reserves and scenario planning. We'll talk more about scenario planning later. But as a charity runs, you must ensure that you budget for reserves, because reserves will help when the need arises. Let's take a mind back to 2019 to 2021. So many charities that did not have reserves as at that point in time, they really had a challenging time, and even many of them closed. And we don't want that. We want to fulfill the mission. We want the charities to fulfill their missions. So with that in mind, I'll go on to other core building blocks, which is not in a fanciful style as this page is in. So I spoke about mission-aligned planning through costs, recognizing income types, forecast cash flow, and budget for reserves and scenario planning, which I said we'll still talk about later. So with that in mind, I'll just take us to the next page, which talks about unrestricted and restricted funds. As I mentioned it earlier, the charity funds to be considered, the unrestricted funds, they are the general funds. And from it, the members of the board can decide to designate some that, okay, this particular amount, maybe 1% every month, we're going to set it aside for our reserves, or we're going to set it aside for the building fund, and so on. That's by the decision of the decision makers there. But the other side is the restricted fund. Maybe when you are advertising and requesting for money, for grants, for finances, it was for a specific purpose, then you've got to keep to that specific purpose. So we're talking about some of them are, we call them restricted income, and then some of them are endowment funds, which are for a particular purpose. And at times it's like it's the interests on it that the charity can spend. You don't go and spend the capital, because the person that endowed it, that was the purpose. Now, we're going to speak about a few tools that will help us. At times, it's not because charities don't want to sit down to prepare their budgets. It's just that there is a challenge. on tools to use. It's time consuming and that kind of thing. Therefore, people think, how can I find the time for that? I've recommended that some people can want to use Excel sheets. I didn't bring it up here, but if you want it, like I said, you can request for it. I'll send it out. Then another thing that, I use QuickBooks a lot, but there are various software out there that are specifically for charities. Why do we want one that's, has an element for charities? Because it's easy to use to account for restricted and unrestricted funds in it, And then there is an organization called Charity Excellence, which if a charity registered with them, there are various templates that you can use from them. And apart from that, they also have various links to funders, for funders, grant givers, and so on. So there's a lot to obtain from them. So, and, we're not linked with them, but they're doing something good. So we say something about it. And then then I said something about visuals. You can build up visuals. In order to do that, we spoke about resilient budgeting earlier on. We are talking about, okay, it can be rolling forecast. It can include, in case, that, okay, we are expecting this fund, it didn't come in, therefore we've got to reduce this and that kind of thing. But in addition to that, you can also build up something like 3 budgets for yourself, that will help you to consider confidence levels. You will be able to apply confidence levels, to the budget. I'll give us an example here. These are some of the flags that, what can happen. Maybe you already have a budget. You already know that, or you already expect, and already maybe 3 organizations have already promised funding. And then last year, you know how much people as individuals donated, and you know how much legacy income you are expecting because people have already willed legacies. You already have some legacies. So you know how much, maybe interest, maybe percentage, and so on. So you already know how much is coming in. That is something that you might say a best guess budget that I'm saying I'm expecting 215,000 when I consider all the sources of income. But then if it happens that there is a 20% shortfall in it, can we still survive? So I'm saying that best guess, that is 7%. You are saying you are quantifying it, that you are sure that at least it's very likely if you grade your confidence from 1 to 7, from 1 to 9 rather, that it's very likely that you will obtain all that money. But then if there is a shortfall of like 20% from it, can you still survive? And you kind of level it, you grade it, you grade your level of confidence. Okay, we should still survive. Maybe you grade that 8, that we will still survive, even if there is a 20% shortfall. And then supposing there is no shortfall, there is spiking costs. As we know, there are rising costs. If rising costs is 10%, can we still survive? Okay, based on what we expect coming in, based on our year-to-year expenditure, we're still sure that about that yes, we'll still survive. But if on the other hand, you realize that it's not possible to survive, or maybe we'll just be trying to balance things up. Okay, maybe you'll say, okay, I'll give it five, I'll give it level 5, my confidence level. So that's why I put that in brown, moderate downturn in your confidence level. And then if you kind of think, oh, this will not happen. So the confidence level is at about 2 or 1. If maybe we have income shortfall of 20% or spiking costs of 10%, this is going to, I mean, the budget will not be able to stand this, will not be able to stand it as an organization. We'll need to make other plans, that kind of thing. Do we need to go and obtain loans, or are we going to plan how we can close and that kind of thing? You've got to consider it. But budgeting helps, in being able to make a decision on these matters. At this point, I would like to know whether there is any question before I continue. Okay. If there is no question, I'll go on to the next slide. Now talking about common pitfalls which we need to avoid. Common pitfalls. You see, in some situations, some charities don't consider what it costs they're going to fundraise, how much it costs, they're not aware of it. Another situation is that they overestimate what is expected as income. Maybe thank you for that. I think one of my sisters wants to leave. Okay, they don't know how much they have overestimated income, and they just think it will come on, it will come. That amount will come. And then another thing they ignore is other overheads. Yes, we know that we already have the numbers of staff that we pay, but what does it cost to have volunteers on board? Are you considering, are you going to be giving them something like transportation fare or something for lunch? And we don't consider all that in budget. Yeah, it's only £5, but all those things matter. I mean, like Tesco says, every little matters, or every little helps. I think I missed that. So we've got to consider that, And then another thing is they don't consider what the cash flow is really saying. They kind of think, oh, it will be okay. Okay, this particular funder said they would send the fund in March last year, but they didn't send it until May. Is it appropriate for you to say that because their letter said March, they would definitely send it in March? Why don't you consider that it might be May like it was last year? That's another pitfall. Then another thing is never revisiting the budget. Maybe it's even a church. They've budgeted that every year we obtain 100,000 and our expenditure is 80,000. and it will be like that. Supposing it doesn't happen like that. Maybe it's an animal charity. It costs 50,000 to look after 7 animals, 7 dogs for 1 year. Do you forget that there is inflation? And you are saying, oh, next year it will cost the same thing. So these are different areas that we need to consider. Okay, right. Do we all understand what I'm saying about this common pitfalls? Please talk to me. Thank you. Thank you very much. Thank you. Okay, so when we go away from there, we're saying that when you are planning confidently, you've got to consider the scenarios. You know, we spoke about that in an earlier, in one of the earlier slides, where we spoke about alerts and flags. You've got to consider those different scenarios, what will happen, and then you've got to consider the actual, what is really happening as well. So that's why I said plan confidently for uncertainty. Create 2 to 3 versions of the budget. Plan A may be best guess. Plan B may be, oh, if we have a slight income shortfall. Plan C can be, okay, if the costs spike, like the costs have been spiking. So when you've got all this mapped out, you're able to make decisions. It's not about just writing out the budget. It's about decision making. Okay, if costs spike by 10%, you know what action you intend to take. If the income, if we have a shortfall of 20%, are we going to take something from reserves? What else, what other action are we going to maintain? Or are we going to take? Are we going to increase our fundraising events, number of events? What will it cost us to do that? So from that end, we now need to, as we continue, we need to now consider that with this in mind, it's a bit of work, but it's better to plan. It's better to consider the impact of plans. It's better to, you know, it gives us confidence in the organization, in running the organization. It gives confidence when we have all these plans put in place. Now, with that in mind, we have covered the areas we proposed for today, but I will summarize for us. Now, our key takeaways that I expect. Oh, before I do that, for 1 minute, can somebody tell me, just put it on, in the chat, in chat, what do you consider as key takeaways for you during this session? I'll be checking the chat for a minute. Hello? Please, does somebody want to, you know, either speak or, you know, write something that they will be taking away in this session? Oh, thank you for that message. Key takeaway, ensure you have a strong budget, a resilient one. Thank you for that. Okay, thank you for that. I will move on. And that is make sure more than one budget is developed. Okay, thank you. I will now move on. Another person that the budget has to be continually adapting to the external environment. I like the way you put that. Thank you. So let's move on to the next thing, which is a summary. In planning, make room for shortfall or extra income. Fantastic. Okay, with that in mind, I have a summary of key takeaways. Actually, my summary is about, um, 12 snippets that I take from it. Number one is that we have that we have affirmed that it is critical, it is important that we have budget at every stage, and we have it near term, medium term, longer term, consider that. And then, it's not a one-off exercise. It's something that we need to, continually go back to check, maybe every 6 weeks. What's the situation? What were we doing? What have we done? What have we achieved? It helps a lot. Then another thing is that there are key building blocks, things that you must not forget to do. Timely adjustment, considering every things that you don't sidestep, tools that can help us to achieve our purpose. And then another set of takeaways are this, which is a summary of what we've discussed as well, that our planning has to be mission aligned. Our budgeting has to be mission aligned. We have to bring in all the costs. We have to track our income and, appropriate it the right way. Because if you use reserved funds as expenses, you're not being statutorily compliant. And also, we're not being honest, So we've got to follow it. And cash flow, reviewing our cash flow is important. And we need to be budgeting for reserves. And then comes in the issue of scenario planning, the three types: lower costs, higher costs, whatever we think needs to be considered. So I'm saying to us, let's take action today. Let's take action today. As a follow-up to this session, we're offering the following: a free budget template tailored for small charities is going to be an Excel one. Then webinar snippets once they're ready. Then if you want to rewatch the webinar, we'll send it to those who want to see it. Then the spring statement is still on our website, and also the budget from last year is still on our website, but we'll offer the link as need be. Then if you want part of our services, 10% discount on our outsourced accounting and advisory services. This is designed to lighten your load and strengthen your charity's financial health. All you need to do is quote offer 300625C. So with that in mind, I'll also remind us a bit about ourselves. It's not much. AE Accountants Limited, we're based in Reigate, but we serve charities and small businesses all over England. And we help them to thrive and grow. You can call us or email us. You have my email addresses, and I'm going to email you after the session. And then, yes, the last but not the least, I would like to know, do you have a question? Because when a teacher teaches or shares something and there's no question, you kind of say, oh, did it go well? Did they understand? So at this point in time, does anybody have any question? I'm going to stop my share now while we're thinking about it. Okay. So is there any question? Okay, that's interesting. Do we understand the areas that we have discussed this afternoon? Please put something in the comment if you don't want to speak out. We're going to finish by 13:35. Sorry about the break when we started, so please just give me that few minutes for us to wrap up properly. So please write something in the chat. I know I have key takeaways, but do we understand? Are we going to move forward with doing these things? I know there are 9 of us, 6 of us left. 9 of us were on here before. So, well, let's, yeah, okay. What kind of percentage of predicted income do you recommend for each budget? Thank you so much for that question. But you know that each charity finance person, whether the treasurer and the finance manager or finance officer, they will know, they'll be able to look back on the results they have been having. So it is important to be in a position to look back, which means that you will have to make sure that your records are very good. And if you've not been doing that, you can start now. Your bookkeeping records, whether you are using a software or even using Excel, they're up to date, or you even using your banking app. It's not so easy to keep track. So from that, you will know where the changes have been occurring. And that will give you an idea of how to assess it. If you know that in year 2021, there was a shortfall of 10%. In 2022, there was an increase of 15%. In 2023, a shortfall of 5%, and so on. You can do a weighted average to make a decision on what you will expect as increase or what you will expect as a decrease in income. And then when you are thinking of expenses, you want to consider what has been the rise, the percentage rise in, living costs, inflation, and so on. So you've got to be aware of what's happening around you. Thank you. Is that, does that answer your question? Okay. Yeah. Okay. Endowment fund, can the interest on the investment be used for non-restricted purposes as well? It depends on the conditions of the endowment. If it's reaching there that you can use it for such purpose, then you do. But if not, then you don't, or else you'll not be statutorily compliant. So, and then as I said, being truthful about what we're doing and that kind of thing. you know, is important. Loyalty to people, loyalty to the government. So we don't touch it if it's not meant for that. Okay, right. I want to say thank you very much for joining us this afternoon for our webinar session. Thank you for being patient even when we had IT problems. We're very grateful. And I look forward to hearing from you in any area in which you want us to support you. We do also provide accounting services, bookkeeping services, payroll services, and then we provide independent examination services, business advisory services. We do them. So please don't hesitate to get in touch with us. In 3 months' time, which is going to be the last Thursday in September, we're going to have another session. We will let you know on time what date that session will be. This that we are having on the 2nd of July should really have been on the 28th or 28th of June. But because of some issues, we couldn't hold it then, and we just thought, let's have it on the 2nd of July. So you will hear from us, and I just want to say thank you for coming along, and bye for now. Bye, everyone. Thank you. Okay, I will stop recording now. Okay, stop.